Hello everyone, I hope you're doing well anywhere in the world you are. If this is the first time you are watching my videos, welcome. I hope you enjoy and learn something useful. If you've been watching my videos and you have already subscribed, welcome back. Happy to see you here again. What I want to share with you today is 6 tips for detecting price chart trends. If you've been trading for some time, you must know that there is no magical indicator or tools to determine the price trend and price movement. We as traders, with all the effort that we put in, with all the time that we spend for determining the trend of the chart and where the price gonna go, price can change its direction in any time. You must know that by now. If the price doesn't move as we expect it to move, we have to go back and analyze the chart again. Is there anything that we missed? Is there a higher time frame support as the resistance area? Is there a news going on? Whatever you do, just don't forget that all these analysis and chart pattern and everything is done by a tool called eyes. Your eyes are the most important tool that you have. You must look at the chart and you see something that if I look at the same chart at the same time, I might see different things. So your eyes and how you observe the price chart is your analysis. My analysis is going to be different from yours. And anytime that the price doesn't move based on your analysis, be flexible. Don't stick to that. Don't be stubborn and just no, price should do this. Price moves as it likes to move. So don't be stubborn, be flexible, and go back and analyze the chart again. Maybe you missed something. Trend analysis must be a part of your strategy to open and close the trades. It's not a good idea that you enter the market based on only one reason or one signal that you get. Normally, you must stack up these signals one on top of each other to have a confluences of signals, so you have a higher chance of winning trade. That's how you can determine that a price gonna hit your target and you have a higher win rate based on your analysis. There are so many things that you can do, but at the foundation of any strategy, you must know the price chart movement. The technical analysis is based and founded on the price chart, the trend lines, the support and resistance lines, and technically the highs and lows. After analyzing the price chart, then you can add some indicators and all that kind of magical things that you have on your strategy. So sometimes you look at the chart and you think that the price is moving in one direction based on the analysis and your observation. But actually the price is moving in exactly the opposite direction. But because you're zoomed into the chart too much, you cannot see the general or the main trend that the price is moving. So at this time, you better zoom out or you go to a higher time frame to see the general direction and the higher time frame movement and trend of the market. So maybe the price is in a correction move, or maybe it's kind of a news is coming that you don't know what's going on. So zoom out, do not go to the candlesticks and look at the single candles. Having a bird's eye view of the chart is more important at the foundation to determine the trends. After you do it like this way at the bird's eye view of the chart for some time, you can find your zoom of the chart. As I said before, everyone is different and your eye is different from my eye. So you will find your zoom and you know that which zoom is good for you. So don't be stubborn, don't look at other people, everyone is different, find your own zoom. So the first tip is observation. Just look at the chart in a zoomed out view or a higher time frame and determine where the price is going. Is it trending down? Is it trending up? Is it in a sideways movement? Is there any support and resistance area or something like that? That's all you need to do. There's no magic or anything. Just have a bird's eye view of the chart. So observe the higher time frame and zoom out view. Here we are at the 1 minute chart. if I want to see the actual trend of the market, I normally go to the 15-minute chart or even 1-hour chart. Here I can see that the whole thing that I was watching in 1-minute chart is actually a very small correction here at the end. So I cannot decide on a 1-minute chart where the trend is going. So the price has moved up and all this trend coming down. Maybe this is a correction and the price is gonna go up. I don't know. So I must look at the bird's eye view, a zoomed out or a higher time frame to see where the price is going. That's all I need to do. I must know that there is a support and resistance area here. There is another support there. There is one at the bottom here. That's all I need to do. Where the price is going. I have these smaller areas which the price has hit now. That's why it bounced off. It's going up. There's another one here. This is a very good area that the price is gonna stop or have a correction or something. So that's all I need to do. In the higher time frame, that's what happened. Now, the other thing that you must know is the highs and lows. You have to determine the main highs and lows, the obvious ones. You don't need to look at the very small ones, like down here, one up there, there's another one down here, the last one is up there, and probably these are as well. That's all you need to do. You can go to the lower time frame as well. So if I delete all these and we go to the like a 5-minute chart, probably we're gonna, as you can see, we see different ones. That's all you need to do. From the higher time frame, you go to the lower time frame and determine these main highs and lows. Now, in an uptrend, you must look at the lows more. Those are more important. And in the downtrend, the highs are more important. So you must know that. The second tip is the higher highs and lower lows, or higher lows and lower highs. That's what's important. As you look at the chart, you must know that the highs are going lower, as you can see here. So we're in a downtrend. What about the lows? Are they fluctuating or no? Actually, the lows are going lower too. So after determining the major highs and lows, you must know, okay, we have higher highs or higher lows, or lower highs and lower lows. That's how you determine the price is an uptrend or a downtrend. Here in the 5-minute chart, we are in a downtrend. But if we go to the 1-hour chart, as we were before, as you can see, we are in an uptrend. Why? Because we have higher highs and higher lows. We are still in an uptrend. The fourth tip is that what is the market reaction? What is the price reaction to the major lines, major support and resistance areas? After you determine the highs and lows, you can look at them maybe a moving average, or you can draw some lines and trend lines and resistance lines. Let me draw some for you. Based on the highs and lows that we determined, the price broke this line, came back up, and is going down. But if you go to the higher time frames, probably the price is still in an uptrend. Has price reached to this support area? Not yet. Is it gonna hit? We don't know. We have to go to the lower time frame. Price has broken this area. There's another one down here, or the main one which is down there. These are the areas that you must determine, and then look at the price and the reaction of the price to these areas. This is the fourth tip. The other thing that you can do is adding a moving average beside these trend lines and support and resistance lines. Let me delete all these, and then we can add a moving average, maybe a 50 or 100 moving average, to see the trend is way more effective and useful. So you add a moving average. I put a 50. Let's see how the market is reacted. So as you can see, this is a 50 moving exponential moving average. The price breaks the moving average, comes back to this moving average, it acts like a support and resistance and goes up. Again, support here, another support there. As you can see, the price cannot break this moving average. But finally, when it breaks the moving average, it comes back up and it falls down. This is how you can see the price is uptrend or downtrend. Is it in a resistance area or in a support area? What's going on? You can't have a full observation in the higher time frame of where the price is going. To see a bigger picture of the market, let me delete these. You can add another moving average with a higher period, like let's say 200, which is a standard. Everyone does that. Let me delete these. Okay, a 200 moving average. Over here, as you can see, price hasn't come to this 200 moving average. But if we zoom out and see a bigger picture, as you can see, whenever the 50 moving average has moved above the 200 moving average, the price has been uptrend. Whenever the price has come to the 200 moving average, this area has been a very good support and resistance area, and you know that the market's gonna stop. And as soon as the 50 moving average is above the 200 moving average, you can be sure that the price is an uptrend. And at the last section, as you can see, the price has broken the 50 moving average and it has come to the 200 moving average, but it stopped there and it couldn't go lower. Came back up, gathered some energy, and then fell back down. If the 50 moving average crosses the 200 moving average, we are, well, officially in a downtrend. That's how we can use moving average to see how the price has reacted in the previous times, and is there any area that at the moment the price is gonna be in an uptrend or downtrend, or the price is gonna stop and reverses back. The fifth point is that is there any signals forming? So when you look at the chart, in this case we have 50 and 200 moving average. If you look at the chart and you see that the price has broken the 50 moving average and has stopped at the 200 moving average and it's going up, probably the next area that the price is gonna reach is again the 50 moving average. This area is very important. Let me grab my pen. This area is very important for two reasons. First is that the price has bounced off of the 200 moving average. It's gonna have a reaction to the 50 moving average. And the other thing, if you remember, it was this trend line. Price has broken trend line and it's gonna come back up, as normally they call it like a last kiss or something. So this area is gonna be an area that the price is gonna change the direction of the trend. So you must know these things to determine, okay, I'm gonna go as a sell or I'm gonna have a trade as a buy. I normally, when the price is under the 50 moving average and it's under the trend line, I never go buy. I don't buy the market. I go always short. Guys, if you're watching this video so far and if you find it useful and you haven't subscribed to my channel, it's a good time to subscribe and share this video with the people that you like and you know that they like to learn things like you. Okay, the last tip, the sixth tip, is that the trend direction change. As I said earlier, when the price is going up, we have to look at the lows. If the price is going down, we have to look at the highs. So based on the higher highs and higher lows and lower highs and lower lows, we determine that the price is going down or going up. Look at the moving average and you determine if the price is gonna stop, is there any resistance area or not. Based on the resistance lines, trend lines, or fan lines, you can determine if the price is gonna break back or it's gonna move on. At this point, if the price is going down and we're in a downtrend, but the price cannot form a lower low, it cannot hit the previous low, you know that the price power to move down has changed and has decreased. So maybe in the near future we're gonna have a price change or the trend direction changes. That's why the highs and lows are important. If we're in an uptrend and you look at the higher highs and higher lows, but at one point price cannot hit the previous high, we don't have a higher high, that's a very good sign that the price has lost its power, and maybe in the near future it's gonna change the direction that it moves. So not forming a higher high in an uptrend or lower low in a downtrend is a sign of a trend direction change. It's a good area to not enter the market. Just stay away to see what price is gonna do. Alright everyone, I hope you enjoyed these 6 tips, and I hope these 6 tips has helped you to determine the trend direction and the trend direction change. If you have learned something, please subscribe to my channel. If you have any questions, please ask in the comment section. And if you know someone who wants to learn these things and doesn't know, please share this video with him. That would be great. I wish there was someone to tell me these things back then when I started. Have a good time. Bye.